If you're a realtor, this message is for you. Here are three really important points to watch out for as it relates to mortgages for the 2026 real estate market. The first one is we obviously know this 2026 is going to be a buyer's market. And for your first time home buyers, you want to make sure that they are pre-approved versus pre-qualified. And what's the difference? Anyone can run a pre-qualification for themselves. We actually have a really great mortgage app. I'll send you the link in this message. You can actually download that mortgage app and run a pre-qualification. And it just kind of gives you a sense of what you can qualify for, run a couple of scenarios for mortgage types and terms and amortizations, just so that the client can get an idea of what this is going to cost. But true pre-approval is where we actually run a credit history, we verify income, and we also confirm debt ratios because we want to make sure the GDS and TDS is in line, especially if it's going to be a high ratio mortgage. So there are instances where if you are working with a first-time home buyer, we can actually get them in a situation where they may not necessarily need a financing condition. We always obviously recommend it, but if they're in a competitive bid situation, sometimes a no financing condition is helpful in obtaining and getting that offer accepted. This is an important point because it's so important, at least at the Mortgage Center. We believe that the mortgage broker and the realtor are working hand in hand to help the customer get that offer accepted. So for your first time home buyers, we are actually contacting all of our first time home buyers. I think there's just over 200 of them in our system. And not only are we updating their mortgage pre-approvals, but we are also readjusting the gross debt service ratio and the total debt service ratio because there have been some recent changes that allow high ratio mortgages for people who are first time home buyers to have a 30-year amortization. So that allows them to buy a little bit more, but also keep the mortgage payments low. So if you do have a first time home buyer, please have them reach out to us. Even though they've been pre-approved in the past, we can update their mortgage pre-approval. The second point is if you have clients that are buying and selling and they have an offer on a purchase, but and that's conditional on the sale of their existing home, but let's just say they haven't sold it within that conditional period. We actually have a really great mortgage product that allows customers to purchase a house. And if they haven't sold their current house, we can do a temporary loan that will allow them to have both houses or own both houses for a period of time. Now, again, sometimes the situation is not ideal, but where I find that it's very helpful is if you do have clients that are downsizing and you want them to move into their existing home, and then they want to clear out all their belongings because they may have been in that house for 20 years, and then now you can sell their old home and put it on the market and have it properly staged. So that is a really great situation where clients are downsizing. We are also finding a lot of clients are moving from Toronto still to Guelph. So if you have a client who wants to purchase in Guelph, but let's just say they have a condo or a townhouse condo, you know what the housing market is like in the GTA, especially as it relates to condos. So we have helped a few people who have purchased properties in Guelph. They are not conditional on the sale of their home in Toronto, but and we've made that work financially for them. The other option would be maybe to convert their existing condo or townhouse into a rental property. So that's an option. A lot of people can't afford that, and a lot of people too are worried about renting to people, especially in what's happening with the landlord and tenant board. The last item for you as a realtor is um, if you are having clients that are in a buy sell situation, we actually have a really great tool, and I'm happy to share that with you. If you reach out to me, I'll send it. It's a buy sell analysis, and us as a mortgage broker, we can actually maybe do some of your dirty work for you. And when I say dirty work, what I in fact mean is I find sellers have not adjusted their expectations on what the housing market, what the current housing market is like, and also what their homes are worth. So when we do a buy sell analysis for your clients, what we do is we take a conservative estimate on what they can sell their house for. Because as you know, they're going to be selling for less, but they're also going to be buying for less. So this buy sell analysis tool that we would normally do for all of our buyers and sellers is a tool that I'm happy to share with you. Uh, Keep in mind, if you have a client that has a mortgage through a bank, we do mortgages for TD, Scotia, and Bank of Montreal. So we can help that client port that mortgage if they want to. But in most cases, what I'm finding is that if people are buying and selling, when they sell, they're discharging that mortgage completely and sort of readjusting the new mortgage for their new property that they're buying. So I'm happy to help. If you like this video, please like our YouTube channel, and also please don't hesitate to reach out. I'd love to share that buy sell analysis tool with you or even grab a coffee. Have a great day. Go sell a house.